certainly the darling of the market after that move from Moody's on Friday. 5-year yield, the lowest ever. How much more is left in this trade, do you think?
Well, Ireland has, as you mentioned, they have rallied quite hard, especially over the past sessions again. And now when we look at it in cross-market terms, so against bunds, but even, say, against the non-Eurozone peers like US treasuries, where they're basically now trading at the same level in some buckets, clearly this shows that we've come quite far. Okay, the momentum looks quite strong, so this rally probably has a bit further to go, but over, say, the more medium term, we think it's going to cool down.
Let's just pause there and recap. 5-year Irish yields now yield the same as 5-year US treasuries, and staggeringly, compared to AAA Norway, which has a €1 trillion sovereign wealth fund behind it, they're about 50-60 basis points lower.
Yeah, I think it shows that there are quite a few forces at play. So, of course, the Irish government has done an impressive job and the economy is turning around. But we shouldn't forget that the key structural underlying driver is basically the ECB's policy, which is really ensuring that or forcing investors into higher yielding assets. So we see the same in Portugal. Of course, Spain and Italy, they have also benefited from this. So it's not just fundamentals. Yeah.
In mid-2011, Irish 5-year yields were over 17%. They're now 1.62%. There can't be much more left in this, surely.
Yeah, we totally agree, and I think what I just mentioned with this hunt for yield and hunt for pickup, sort of Ireland has been a key beneficiary of this over the past years. But now probably they will suffer a bit in the sense that investors will look at this and then they will have a look where Portugal is trading and other, say, high yield European countries. And then probably they will decide, okay, in that case, we just stick to the likes of Portugal and, say, even Greece eventually.
And it must be, I mean, obviously the market's quite euphoric here, but that upgrade from Moody's does take Ireland up to the same level as Romania.
Exactly. So this is the other key component. We shouldn't get carried away by the upgrade, because when we look at, we call it the ratings gap between Ireland on the one hand, and then the core countries like France and Belgium. So this gap in ratings is still quite large. So which at the end will also imply a limit of how far Irish bonds can rally against these better rated peers. What
do you tell your clients, because we have the probability, we think Ireland's going to come to the market in the next couple of weeks to take advantage of this momentum. Do you tell your clients to participate in those auctions?
Well, it depends a bit on the investor preferences, but I think at this stage what is shifting now and what we recommend is really to look at the curves rather than doing uniform spread and outright plays. So it might make sense at this stage now to extend duration in these curves.